This is Chris Reddick with Chris Reddick Financial Planning. In this blog post, I talk about when to use target date funds as a do-it-yourselfer investor. So when are the opportunities that you can use these type of target date funds? All right. So target date funds are very popular for early career investors. So they're very common in 401k types of plans. And the reason why they do this is that when you enrolled in your plan, you just purchased, you enroll, and then you get one fund which mirrors the date you're going to retire. So it could be like 2060 is your retirement date. So you would get a target retirement 2060 or 2050 or whatever. So it would target your retirement date. So it would be more stock heavy when you're early in your career, so more risk with stocks, but greater potential return. And then as you approach retirement, it become more bond heavy, so with less risk, but perhaps lower return. So the idea is that when you need the money in retirement, it becomes more conservative and more aggressive early in your career. So these are really popular in 401k, 403b types of plans. All right, so that's the use for them. So the idea is when to use these as a DIY investor. Okay, so someone likes to do it themselves. So when's the best opportunity? And basically, the benefit obviously is just one fund option. Okay, so it's very simple. It's diversified. It's balanced with bonds, stocks. So you don't have to worry about it. You just contribute every month, and then generally the performance is just as good as if you pick the underlying funds, right? So you're not going to do any worse with a target date fund than picking your own funds, right? But one of the drawbacks is that the expenses for target date funds tend to be higher than the individual funds. So target date funds basically, since they rebalance everything themselves, they have these underlying funds like the S&P 500, mid cap, small cap, and so forth that are composed in the target fund. So in order to give you this convenience, they charge you a higher expense ratio. All right. So, and also these target retirement funds can be actively managed, and the expense ratio can even be higher. So I quote here of 0.60 expense ratio. So that may not seem like a lot, but that's over half of a percent. That'll add up with a large 401k plan. And a smaller plan won't make too much of a difference. Research shows that it pays to manage your own funds. So research actually shows that you get a 3% greater return if you actually pick your own funds rather than target date funds. So that rewards you for actually doing that. But I'd make the argument that you don't really want to do that unless you have enough in your retirement account, say greater than $50,000, and then you can start getting the underlying funds. And it's for someone that really wants to learn about investing and wants to take the time to pick all the funds, do the research, and so forth, or have someone like a financial planner help them pick the portfolio that meets their needs. All right, so I make the conclusion that a good benchmark is around 50,000 in your account. I think target date funds are fine for that, but when you get over that amount, you might want to pick your own underlying funds, just because the expenses will add up. All right. So I guess the key takeaways are four key takeaways. Smaller accounts, target date funds, I think are a great benefit. Accounts greater than 50K, maybe use low cost index funds, perhaps do research on that or work with a financial planner. You can technically do better. Research shows you can do better by 3% if you pick the underlying funds, which is pretty good, sizable over time. But if you don't want to take the time to do it, a target date fund will be a better option for you. For investors who want to help with their investing, it'd be wise to work with a financial planner to help you set up the underlying funds if you don't use a target date fund, or just have someone evaluate the target date funds options you have. Some of them, as I mentioned, have high expense ratios. So all these things you need to think about. So the bottom line is target date funds are good in my opinion. They really benefit the typical investor, and they're great in 401k plans. You could do better, picking your own funds, but you just got to be comfortable learning more, working with someone to pick the right funds for your 401k. Okay, hopefully you found this helpful. Reach out if I could be of service.